I recommend if you have a side hustle, you should set up a business structure. You should sit down with someone, create either LLC or S corp. There's benefits to both. A lot of people think like, oh, putting this money away. Like, no, listen, this is you're putting money in a savings account for yourself for retirement.
Or your beneficiaries.
For your retirement. So if you don't have no use for the money, put it away.
Right.
It reduces your income. You're gonna get more money back. I mentioned before. Not only can you contribute to like your employer plan if you're W-2, if you're making less than 80, you can open up an IRA and contribute to that. Now, if you're self-employed, depending, if you're the only person and you own a business and you don't have any employees, look into a solo K. It's a beautiful thing. So you get a state deduction also for the 529 plan. So depending on the state, like for example, New York, there's a $5,000 state deduction for the 529. New Jersey is $10,000. Now, if you're married, it's $10,000 in New York and $20,000 state deduction in Jersey.
Yo, que lo que, mi gente?
What up?
That's how it's done, Ralph.
That's how
I'm working on my intro.
Take some notes.
Take some notes. It's gonna be better. Wow.
Yo, what up, fellas?
What's going on, guys?
Yo, I found out you guys recorded without me last week, and I'm tight, bro.
That's what happened.
We did?
I'm tight.
I don't
I'm
even
tight.
remember that.
I'm
It
tight.
happens, bro. You called out, so what do you want me to do?
And it was on the weed day.
Reyes had to step up to the plate.
Yep.
And he did his best impersonation.
I tried.
You did a good job.
I'm sure.
Yeah.
Yeah, I saw
give
the
you more credit
episode.
than
The
what you
episode's
give
good.
yourself.
The episode's good. Go check it out.
Yeah.
What's it called? Take the high road.
Take the high road.
Coming soon.
It's right here. Look, it's right here.
Oh,
Is it proof that I was here?
Oh, it's not out yet.
Yeah, you really put it. You really.
I think
put it on
Jay's
your
still
phone.
hot.
I got
from that episode. Jay's still on the high road.
Please, not. Hey, keep it a secret.
All right, yo, Reyes, you want to introduce our special guest today?
Absolutely. Great friend, known for now for well over a decade. Again, we try to bring on entrepreneurs to be able to explain to you guys on how you can implement basic strategies. Fern has a fledgling practice out in the Bronx. The man has extravagant taste. We're part of this group of what we call it, fine dining, where we tour different
Yo, I've been
restaurants in
asking
the
to get an
city.
invite, bro. No.
You're out, man. I don't know how to do an intro like that. But yeah, so we're good friends, and Fernando's gonna bring a lot of value today. Being that tax season is right around the corner, if you need to make these last minute changes, I think you're gonna get value from this episode. And yeah, welcome, Fernando.
Welcome.
Yes, sir.
Thank you guys for having me. Might be a little overdressed, but
Oh, man.
That's all good.
Yo, it's like 3 hoodies and 2 tees.
You should have told me. I would have worn my 3-piece today, bro.
That actually goes well with the guest because the only person who gets to wear a top like a blazer should be the guest, right?
Yeah, well.
Unless
The one time
Again.
I wore a blazer, man, they gave me a lot of shit for it.
Oh yeah.
Yeah, as
Nah, but you look good. You look good, man, with your
Next time I
blazer.
come in a hoodie. Next time I come in a hoodie, right?
And then
You
we'll all be in
right.
blazers and shit.
We had someone wearing a blazer that had a collar outside.
Oh yeah.
oh, that was a
Guys are all
classic.
jerks. I swear, they brought me on this stand and just make fun of me. This is unfair.
So
I think it's a
Fernando
Reyes thing.
or Nando. I hear you say Nando, but I see Fernando.
You can call me Nando, Fernando,
All right.
Fern Dollars.
Oh, Fern Dollars.
That's it.
Oh, that's it. Fern Dollars.
I go by all those names.
There's one here that's J Dollar, but it's
On the
a
right type of day, I'm
a
Jay
different-
Diamond.
A different profession that he has.
Jay Diamond.
Really?
Yo,
Yeah,
so
I think
Fern
Fern-
Dollar.
Go ahead.
Go ahead.
No, I think that as you can see how the man is dressed. I mean, you can see his shoes, you can see his watch. They don't call him dollars for nothing. All of a sudden,
All right. So
that was
okay.
a joke, man. What's going on over here, man? What's going there?
the tequila hasn't kicked in. The tequila hasn't kicked
What are you talking about? It's coffee there, all right?
Bronx was that Bronx was.
The Red Bull was giving him
Yo,
wings.
Fern Dollar. All right, so tell us a little bit about yourself. Where do you come from? We're all here, native New Yorkers or raised in New York. So are you from New York? Where are you from?
So I was born in Harlem.
Harlem.
I was raised in the Bronx
Okay.
to Dominican parents. Yeah, been in the Bronx my whole life pretty much. So I'm glad to be here. Be able to shoot this episode here in the Bronx,
Dope.
hometown.
Okay.
So yeah.
And we usually tell people we're in Midtown, in some studio in Midtown. No, the boogie. Shout out to the boogie. All right, so tell us a little bit about your practice, and you know how you found this industry that you're in.
So I started my career, I want to say about 15 years ago. I started at JP Morgan as a financial advisor. I was there for 11 years. Once I became a certified financial planner, that's when, you know, I decided it's time for me to start my own practice, or it's time for me to go on my own. And when you're a certified financial planner, part of, you know, what you've learned is taxes. So it just made sense for me to start a tax business. I feel like I'm able to do more than what a CPA will do for you, just because, you know, I'm able to do some actual planning. So I started a tax business back in 2020. Every year is growing more and more. Doing some good things for my clients. You know, and I'm hoping to share some stuff that I'm doing here with you guys.
Before we get to that, I got a question, Jelly. I'm sorry to interrupt you.
Go ahead.
But so you do financial planning, right? And you get into the tax business, right? So for most people, it seems like these tax professionals come out only during this time of year, and then they go somewhere else, and the businesses change logos, and the storefront becomes something else. Like I even seen like a 99-cent store.
Listen, that's something you have to be real careful.
Right,
you know?
right.
You want to make sure that if you're getting your taxes done, you're getting it from a professional who's going to be around. Right, not someone that's a tax preparer that you're gonna go in there, you're gonna do your taxes. They're gonna, you know, make a mess out of your return. Then the following year, you go back and, you know, like
you get audited.
Like you said, it's a 99-cent store.
Right,
now,
right.
You know, so
Right, so there's a difference: financial planner and a tax preparer.
It's a big difference. You know, when you're getting your taxes done, you know, you either want to go to a CPA who's gonna do, you know, perhaps a really good job. But when you go to a certified financial planner, now you get some tax planning, which a lot of CPAs don't do. Like I've been working with a CPA for years. When I was a banker, financial advisor, and I would go to him for tax planning, that's not what he does. You know, he's good at preparing my taxes. He'll give me advice here and there, but he wouldn't do tax planning, and that's a big difference. When you're a certified financial planner, that's what you're doing. You're doing some planning.
Okay. Fernando, so let me ask you a question.
Bro,
You get bypassed.
Yo, there's 5 people here today, bro. You better speak up.
So my question is, like, when you became a CPA, right? And you said
CFP.
CFP. So was that the norm? Like in your colleagues that work with you, did they take the initiative the way that you did? That you said, you know what, let me go do this on my own, or was it something that at that time in your company you said, you know what, this is the route I need to take because I'm not going to get, you know, these opportunities staying put in the corporate world where you were in the past?
Really good question, because when I was at the bank, when I was at JP Morgan, as a financial advisor, you're limited to what you're able to do. So therefore, you know, you see a lot of financial advisors at the bank. All they're going to do is talk to you about investing your money. They see money in your bank account. They're going to pull you to the side.
The commission.
They're going to tell you, listen, invest in this, invest in that. Not many options, right? So when I was at the bank and I saw that that's what I was doing, I wanted to do more than that. I wanted to grow. So when I did become a certified financial planner, I had to get out of there, right? Because you get all these tools that you're not able to use when you work for an institution like a JP Morgan. You know, they limit you to what you're able to do. So that's when I decided, you know what? I went, became certified. Now I'm able to do all these new things. I'm not going to be able to do it here if I stay here at JP Morgan. So let me go start my own practice where I'm able to do the tax planning, talk to clients about investments, talk to them about insurance, and, you know, all type of financial needs.
All right.
Awesome.
So my question in terms of
I'm on deck, ref.
like, would you be able to pretty much tell us the difference between a tax preparer, a CFP, and an enrolled agent, particularly for your strategic tax planning?
Yeah. So when you look at a tax preparer, you know, they're pretty much, you know, taking a course, learning a few things, and they're just going to prepare your taxes. Are they going to do a good job? Some of them do a great job, you know, especially the ones that have been around for years. But for the most part, you're going to find a lot of tax preparers that many times they don't know what they're doing, you know. Anyone can prepare your taxes, right? Are they going to do a good job? Right? When you're dealing with an enrolled agent, the good thing about that, just like a CPA, they can represent you if you get audited, right? With a CFP, it's a little different. With a CFP, again, it's more about looking for ways to save you money in taxes. Some real strategic ways that I'm gonna share some of it now.
Perfect. So I think that, would you say, based on your profession and everything that you're doing, some of those careers are a little bit more transactional, as opposed to the way that I'm looking at a CFP is more of a relationship building as your wealth starts increasing.
100%. When you look at tax preparers, a lot of them are transactional, right? They get your business, they do your taxes. You might see them the next year, you might not. We were just talking about that shortly. So yeah, when you're dealing with a certified financial planner, this is a person that you're going to build a relationship with. That hopefully you're going to be doing business with this person your whole life. And if you look at my clients, the clients that I have now, these people are going to be with me for life. I'm meeting their kids, their beneficiaries, and they're going to be dealing with me as well. So, it just keeps
Fern
going.
Dollar, bro. You hear that?
It is $1.
Yo, so Fern, tell me a little bit. How do you go from like a kid from the Bronx to working like for Chase, and like tell me a little bit about about that path, because that's not.
He didn't say
something that you
Chase. He
see-
said Morgan Stanley.
No,
JP
it was-
Morgan.
JP Morgan. My bad.
JP
My
Morgan
bad.
Chase.
So somebody wasn't paying attention. You trying to correct me? You weren't
Yo,
even
get
paying
out, bro.
attention.
I'll pick it up.
So, all kidding aside, right? That's not something that like you see coming from a lot of the people that were in the neighborhoods where we come from. I
Yeah.
grew up, just 10 minutes north of where you are. So that's not something that we learn in our schools.
Well,
We
you
learn
grew up
about
in
finance.
Riverdale?
Shut up, man. No, he's from the South Bronx.
Oh, okay. He's from Sobro.
That's what
Get
it's called
with
now.
the lingo,
That's what it's
Josh.
called
Yeah.
now, bro. That's what it's called now. But so like, how do you make that transition?
So I give credit to my parents, right? I grew up in a tough neighborhood. Managed to get out of the neighborhood and go away to school. I went to SUNY Newport, upstate.
Okay.
It's a big party school, by the way.
We party a little bit.
Part of it.
So I got my finance degree there.
Okay.
Once I got back to the city, I was fortunate. I'm part of a fraternity, Lambda Upsilon Lambda, LUL. I don't know if you guys are familiar with that fraternity, but one of my frat brothers actually put me on to JP Morgan. That's how I started. He as soon as I got back, he was like, you know what? Let me get you in front of these people. I got interviewed for JP Morgan, got the job, and and 15 years later, now I'm independent. I have my own business.
Good
So,
for you, man. That's what's up, man. I like that.
Awesome.
It's the way it's supposed to be. So Fern, tell us a little bit about like your typical client. I mean, you're in a very unique community. I'm sure a lot of them don't think about the impact that taxes have on their bottom line, right? So what's your typical client like, and what's your strategy when you initially meet this client as to how to save them some money?
So, and that's good you asked, because, when I think about a typical client, it's kind of difficult to describe a typical client because they're all so different. You have the affluent, the people that come in, have a lot of money. And then, because of the tax business, right? Because remember, I started with the wealth management. So I was dealing with affluent people. But because I started the tax business, now I'm dealing with people that don't have anything. But those are good people to help build, and that's something that I enjoy doing. I enjoy sitting with a college kid who's trying to figure things out, give them some advice that I know in the future are gonna help tremendously. You got kids that are coming in, they just graduated, they started making money. Now I can tell them, listen, make sure you make this contributions to your retirement account. Make sure you max that out. Make sure you put money into a 529 plan. Maybe you don't have any kids, but you can put yourself as the beneficiary in an educational plan. That's what a 529 plan is. You can put yourself as the beneficiary to that plan. Make contributions. If you decide to go to school, you can use that money. That money grows tax deferred, and if you use it for school, it's tax free. Or you can decide to, later on, if you do have kids, you can decide to change the beneficiary to your child. And now you have all this money saved up for your child that eventually you're going to take this money out, pay for school, and not have to pay taxes. You know what I'm saying? So these are some things that you can start doing now that will be tremendous help, in the future, life insurance. Again, we can go on and on.
Yeah, I love that because everyone has a different, like a financial plan is like a glove, right? It's got to fit you right, and it's not a one size fits all situation. And that's why I asked, like, what's your typical client? Because at the end of the day, most of the income that we make, I would say 20 to 30% of it goes to the government. So imagine if we can save even 10 to 15% of it through some sophisticated tax planning.
Yeah.
And then that compounds over time, right?
Yep.
I mean, just imagine the power that we have there. So that's why, like, specifically what I want to know is your basic W-2 employee who goes to work every day, 9 to 5, makes, I don't know, $100,000 a year. Like, what are some strategies that you give them?
Let's talk about it. So let's
Yeah.
start with the deductions and credits, right? Obviously, everyone knows the standard deduction, right? Even if you're W-2, you get a standard deduction. What is that standard deduction? It really depends how you're filing, right? You're filing single, married, head of household. Obviously, it'll be more if you're head of household, if you're married. Then you have the child tax credit. If you have kids, you're probably aware of this child tax credit. You get a credit for being a parent, Might not want to have more than 3 kids, though.
I was gonna ask you that.
You might want to stop at 3 because then there's no more credits, when it comes to more than 3. So you have the child care, the child.
Wait a minute. I got a question.
Hold on, go ahead.
That means if you got 4
Yeah,
kids,
I
you
might
can only claim 3.
No, I'm just kidding. So my question is, you can only get the credit with 3 children as dependents, or let's just say you have someone who phased out.
Yeah.
Can you add another kid to that?
What do you mean face down?
Meaning, like, your
Went on
kid's
to
now
college?
20-something years old. You can't claim her anymore,
Yeah.
right?
No.
But you have 2 dependents. Can you now
No,
go
yeah. If you have another child, yeah, you can
then-
claim those
so
3.
you can always just match.
Child-
You could
this-
claim at 3. You could claim 7, but they're only gonna give you the credit for 3.
Correct,
Three.
but let's say
Right.
2 fall off, then you can have 2 more, and you can continue that.
Right, as long as you're claiming.
Bro,
right,
in other words, Robert De Niro is still able to claim his newest child.
right.
That's what he wanted.
All right,
to
so I
know.
want you to finish that because then I want to like create a little timeline with you here.
So let me go over these deductions and credits. So you got the earned income credit. If you make a certain amount of money, then you may qualify for the earned income credit. That's why you have certain people that don't make much money to have 3 kids and they getting a big return back because you're getting a credit. So even if you're not really making any money, with standard deduction, it reduces the entire income. You're still getting some money back because of these credits, right?
Right.
So you have the earned income credit. Another one is important, child dependent care credit. So you also get a credit if you're paying for someone to take care of your child if they're under 13, or if it's even a parent that is not able to take care of themselves.
Right.
You can get a credit for that. Mortgage interest. If you have a mortgage, right? You're paying interest on that mortgage. That's a
That's a
deduction.
write-off, right?
That's a deduction. If you own a rental property, right? And I know me and Rafael was talking about, I think it was yesterday, we was talking about that. So many deductions if you own a rental property, right? So that's why it's important to be a homeowner. Not only, own a property where you live, but also a property that you're renting and you're making money from, right? Because then we're talking about a lot of deductions that you can take. We're talking about depreciation, we're talking about the taxes of that, all those expenses can help reduce your income and help you pay less taxes. Now, I can go in deeper into this.
Right. I feel like deductions could be like a whole whole
that's
episode.
we
But
can do a whole episode on
Right.
deductions.
We can
So,
definitely gotta bring
let's
it
talk
back.
about this. So, and this is a twofold question that, and the questions have nothing to do with each other. So, but the first one, because we're in tax season, right?
Yeah.
As you prepare for tax season, when should you start preparing as an individual, right? And what should you be ready with, right? Because a lot of people have different situations. So I know you're not going to give me like, okay, here's a list because it's unique. But if you as an individual are saying, all right, tax season is coming around, especially for the non-W-2 people, right? Because 1099s and then what do I deduct? Do I have to have the receipts? Like what should you be doing throughout the year to prepare for tax season?
I think if you are a W-2 or a business owner, there's a lot of steps that you can take now that will help you the following year, right? I get people that come in to do their taxes, and I look at their situation, and I'm like, oh wow, if you would have done this,
Right.
this tax season would have been a lot better.
Right.
You know, unfortunately, there's not much we can do for the prior year, right? A couple of things can still be done, right? Like if you're doing your taxes now and you qualify to contribute to a retirement account like an IRA, you can do a prior year contribution to a retirement account, and that can help you for 2023 if you're filing right now, right? So if you're listening,
So now in 2024,
now in 2024,
you could do a prior
you
year
could do a
contribution.
prior year contribution to an IRA. You just have to make sure you qualify. Like if you have 401k and you make a certain amount of money, over 80,000, then you are not allowed to contribute to an IRA. If you make under $80,000, you might still be able to contribute. Even if you have a 401k and you're making contributions to that 401k, you might still be able to go prior year and contribute to an IRA and reduce your income and pay less tax and get more money back.
So the reason I asked that, it's for this follow-up question. I think a lot of misconceptions, especially in our communities, right? Look at financial planning like really it's a benefit for the wealthy, right? And I feel that Ralph mentioned, like, you know, how early should you start financial plan? And you said something about, I love to get the college kid who just got a job, right? Because now you're building it from the bottom up.
Yeah.
So as a financial planner, as a certified financial planner, what would you recommend to the people listening? When should you start thinking about financial planning? And when should you start doing your research as to who should be doing your financial planning?
I think you start now. And, again, the sooner you start, the better. When it comes to taxes,
So, and what I'm saying is, you could be making $300 a week.
it doesn't matter.
Like, it doesn't matter, right?
It doesn't matter, right? Like, let's say you're not making much money. You can start investing that money, right? You can start putting that money into something that's going to grow, like, individual stocks or ETFs, that just going to provide growth, not pay any dividends. And then eventually it'll grow, right? And if it grows and you pull that money out, now you're paying long-term capital gains taxes rather than ordinary income taxes. If you look that up, if you're listening, you look that up, you're saving a lot of money. Long-term capital gains tax are taxed at a lower rate than ordinary income for the most part. So, and again, you don't have to have a lot of money to invest, right? You can start whatever you have.
Right.
Eventually, if you do it the right way, if you continue to put money into an investment, it can compound, it can grow.
Yeah, compound is a beautiful
Yeah,
thing.
absolutely.
Yeah.
So quick question, right? So we know that your office is in the South Bronx, right?
Yeah.
So we know what the financial challenges that come. That's not the most affluent neighborhood.
Yeah.
So how do you overcome those challenges and get people like from that's like our neighborhood. Like we all come from a similar type neighborhood. So how do you get those folks to start looking at money differently, like looking at money like a tool to build something? Like how are you getting people to think about it differently?
So I love the fact that I have an office in the South Bronx and I get to work with people that, are just like me.
Okay.
Right? It's a misconception. A lot of people think there's no money in the South Bronx. You'll be surprised. A lot of money, right? A lot of money. I've helped a lot of people with, plenty of money, business owners, I have doctors that come in and do business, you name it, but because I started this tax business, like I said before, it allows me to get in front of these people that don't have those assets, right?
Okay.
And again, I love the fact that I'm able to sit down in front of these people and help them plan so they can better their situation, And again, there's just so many strategies, and I want to touch on some of them too. I want to make sure, because I know there's going to be some listeners. They're going to be like, "Oh, can you touch on these?"
Yeah, you got to be like,
No,
all right,
I gotta-
click
I
on the
gotta-
link in the bio.
I gotta go. No, I got to touch on some of them, so
Okay.
people can take something, of value from this.
So all right, so you're tax preparing. Someone comes to you for the first time, right? You identify a few things this person could have done throughout the year better to mitigate taxes, right? To
Yes.
mitigate paying taxes.
Okay.
What would your strategy be for this person? Like just straight off the back, this is the first thing we got to do, and then we go from there.
I'm glad you're asking this because I want to touch on this list. And this is going to be brief. I'm going to go over it. People can look some of these things up, and I think it's going to be real valuable. Let me just go over this real quick. I don't want to miss. I don't want to miss one of them.
This is where we would put our sponsors. This episode was brought to you by
But fill in the blank.
So listen. I don't
Send us
care.
a-
I don't care who you are. I don't care who you are, what your situation is. I think you can implement some of these strategies right away, and it's gonna better your tax situation the following year. Right. One thing that I tell people all the time is like, okay, you're a W-2, right? What do you do on the side? Some people do stuff on the side and they just don't report it
right.
because, they're like, oh, I don't want to pay
Pay
taxes.
taxes,
No,
right.
I'm like, listen, you're forgetting that it doesn't matter. Report whatever income is that because you might have more expenses that you're not even aware of
Right.
that can help your situation. Not only eliminate the income you receive from this side hustle, whatever it is, right? It can help reduce your W-2 income,
right.
right?
Right.
And that's going to be big. So anyone that's out there should be looking into a side hustle. Like that's a must. If you're working, your W-2.
So side hustle.
Fern, I got a
Look at
question.
you guys. Look at what you
Side
guys are
hustle.
doing right now. Like even if you guys are
You wanna write it
W-2,
down?
you're doing this. There's a lot of expenses.
I got
Look at
it.
all these cameras, right?
Right.
Yeah.
Right? So
That's-
This is where we
That's all
plug
about
in the
some
podcast.
Higher
This
production
episode was brought up to
studios.
you.
We get a month free for that, bro.
So Fern, just to build on that question right now. So like I've had several corporations, right? And the government screwed up the entire mortgage industry, put us on W-2 a bunch of years ago. So these corporations, you could take losses on them, right? And then use those losses to offset your W-2.
100%.
Simple.
100%.
But do you need to open a corp to run the side hustle?
I recommend if you have a side hustle, you should set up a business structure. You should
Perfect.
sit down with someone, create either LLC or S corp. There's benefits to both. It really depends, right? Like which one you should set up. Because I get that question all the time. What's better, LLC or S corporation? So it really depends on your situation. A lot of times, the S corp might be better. So you will have to sit down with someone like myself, a CPA, and figure out what makes more sense. But yeah, definitely have a business structure.
So let's just quantify this right now. So you got a W-2 income, you make about 80, 90 grand. You open up a corp. How much does a corp cost? $500?
To set up?
Depends.
Yeah, to set up it depends.
Maybe, right?
Yeah, you're probably
Whatever, depending how much the
setting up
service.
a corporation.
I mean, you can go on LegalZoom and do that. Too,
Yeah,
right?
yeah, you
Whatever.
can do it
So
yourself.
you can
I
do it
recommend
yourself.
you don't.
Got
I've
it.
seen
Right.
how a lot of people do it themselves
Yeah.
and they make mistakes
Yeah.
and then it's just.
But ultimately, you're talking
and
about
they
a
end up paying
couple
twice.
$100.
Yeah,
Well,
a few $100.
Yeah.
Yeah.
A few $100.
Perfect.
Or to
Look at that.
1,200.
Fern,
That's what they charge us, so it better be up to 1,200. No, I'm kidding.
Great.
Then we got.
Oh, we got. But let him go through his list. Right.
All right, yeah,
All right,
go
so
through
side
it.
hustle that is set
Top
up
of
as a
that.
business
That's-
entity.
That's a must. So
Right.
let's start with a side hustle, right? A big one, if you have the money. Again, some people might not have the money to do this, but if you have the money, if it's sitting in your checking and savings account, you might want to look into an investment property, right? We talked about
I know
the
a good mortgage guy.
expenses that you can,
think.
Write
use
off,
from
right.
from the property to reduce your income.
Right.
And something I wanted to touch on is if you're a real estate professional, you should definitely own investment properties, right? There's a big benefit a lot of people are not aware of. As a real estate professional, you might be able to, there's a limit of $25,000 you're able to use to reduce your personal income, right? When it comes to losses from that rental property. When you're a real estate professional and you meet certain tests, and again, you have to look this up so you can understand if you qualify, you can reduce more than $25,000. If you have $50,000, $75,000 in expenses, right? And you don't have no passive income, you can use those losses to reduce your personal income, which is huge. So definitely, if you're listening, you might want to look into that. If you're in real estate, you want to own a property.
So side hustle,
Side hustle, investment.
invest
property.
in an investment property.
No, I had a question in terms of that one though.
You got a list.
I had a
Let
quick
him go
question in
through
terms,
his list.
like I understand the investment part of it, but
You're never gonna finish.
there
We're
is
never
a
gonna finish this
there.
episode, yeah.
I believe that managing some of your investment properties, does that allow you also to be able to max out the tax write-off or not?
Yeah.
All right. So that was my simple question.
Yeah. If you're managing,
Why are you looking at me, Jay?
Because you're looking at me like I'm on a
If you're
timer.
managing the property and you're not a realtor, but you meet certain hours, and you can also go ahead and write off more than the 25% that you're normally allowed. So you don't have to necessarily have a real estate license to do that. It's better if you get audited, but yeah.
Cool.
All right, we're going.
How big is the list, Fern?
Well, give us a few more. Give us
but I'll tell you right now.
These are gems, bro.
These
Especially
these are
I'm
beautiful
asking
things,
'cause
right?
I haven't done my taxes yet.
And you
so I
wanna
wanna
buy
know
another
if I could
Rollie,
do
so
it,
You wanna max out your retirement accounts, right?
max out retirement.
You want to put money away into retirement.
What's the max?
This is
19?
not money that you're spending. A lot of people think like, oh, putting this money away. Like, no, listen, this is you're putting money in a savings account for yourself for retirement.
or your
For
beneficiaries.
your retirement. So if you don't have no use for the money, put it away.
Right.
It reduces your income. You're going to get more money back. I mentioned before, not only can you contribute to like your employer plan if you're W-2, if you're making less than 80, you can open up an IRA and contribute to that. Now, if you self-employed, depending, if you're the only person, if you own a business and you don't have any employees, look into a solo K. It's a beautiful thing. You can actually contribute more to a solo K, get bigger deductions if you're self-employed. And then, there's other plans if you're a bigger company that you can look into. Obviously the 401ks, 403bs.
That's
and
interesting. Dude,
and-
could have like 50K.
and so
Solo K.
Solo K.
Solo
What's that? Like the
Okay.
max is like what?
That sounds
50K?
like your intro.
50 or
logo.
55K?
The que lo que
with-
solo
with
K.
the- With the
Solo
solo K,
Solo
with
K.
the solo K, you'll be surprised. You can easily deduct $100,000.
Which
Damn.
one is that? The SEP? SEP? Or?
No. The SEP
That's a
is
solo
different.
K, bro.
Look into
No,
a
it's
solo
different.
K because the SEP is one of the more popular ones because less paperwork. But a solo K, in my opinion, is more beneficial. So if you have your business and you're a sole
Damn.
prop,
100
look into
grand
a
is
solo
lot.
K. It's a beautiful thing, and
So-
you can borrow from it.
So the
You can
SEP.
borrow from your
There you go.
from just like a 401k.
Just like
you
a
can
401k.
borrow
Got it.
from
All right,
your solo
perfect.
K. You can put money into it and then borrow from it.
And pay yourself
And pay
interest.
yourself.
You're not
Rate of
paying the
interest.
taxes, and you're paying yourself interest. There
That's
you
the
go.
goal.
Got it.
It's a beautiful
Wow.
thing.
So the SEP is what your tax preparer would recommend, but the solo K
The
is
CFP.
is what a CFP would
Yeah,
recommend.
there you go.
I like that solo K. It sounds like a cereal, but I like it.
Solo K.
Solo K.
Solo K.
Real
Solo
quick,
K.
I already touched on the
Solo K.
529 plan, but a 529 plan, I think everyone should have a 529 plan in this room. If you
All
don't
right.
have it, open one up once you leave here.
Right.
It's one of the best accounts, right? Because not only are you able to put money into it, gross tax deferred, and it's tax free, right? It's tax free if you use it for education,
school, right, right.
Education, right?
There was a change. Let's talk about that real quick. There was a change to the 529 recently, right?
Yes.
Could you talk about that? Because before
So-
there was more limitations.
So the beauty now is that if you don't use the funds, they limit the amount. Obviously, I think if I'm not mistaken, I think it's like 35,000. You can convert it to a Roth IRA
There you go.
if you don't use it for
For
education.
educational purposes.
So that's huge.
But also the education piece, it encompasses a lot. It's not just like going to a university, right? Like,
No.
Tech schools.
Like and again, you want to go through the list of what you can use the funds for.
Right.
But it's not necessarily college. You can use it for if I'm not mistaken. Again, I have to because things change all the time.
right,
But if you're paying for private school for your child,
right.
you can use a portion of that money. You can use it for yourself.
Wait
It
a
doesn't
minute,
have to
private
just be for
school
your
like-
kid.
Like
Now you're in the elite
Whoa.
private school. That's crazy. your private school's elite.
You can use it. You just go through the list, of what you're able to use it for. A lot of people just think it's just college and for your kids. It could be for your grandkids, your nieces,
Yeah.
your nephews, yourself.
Oh, that's good.
Yeah.
So
All right, so give us top 5. So you got 4. So we got,
Can I ask one question before
Go right ahead.
go there?
yes, you may.
If someone, let's say someone were to have
By
an
asking
old
if you ask
401k,
a question, you ask
they
the
let
question.
someone has an old 401k, right? They had it through an employer. They left the employer, and they have that money there. Are they able to roll it over to a solo K?
I got the answer. Let me roll it over. I get the commission.
Yeah.
100%. I rolled over my 401k into my solo.
So you're
K.
solo K. There you go.
Okay.
You got that 800 grand there. It's doing nothing, bro.
So Fern, I think you're gonna get.
And you don't want to
calls.
spot me
All
30
these guys,
G's.
Solo
I
K,
can't.
solo K all
Yeah.
day.
What's the
Yeah.
commission on the
Yeah.
$800,000 peso
Probably like
account?
4%.
Let me know when you're ready to open. Listen, guys. On a serious note, if you ready to open up that solo K, I can help you. With
All right, so
set
all
it up
right,
for
so
you.
okay, so we got start a side hustle, we got invest in an investment property, we have the retirement accounts,
The
right?
solo
Whether
K.
that be 529s, Roth IRAs,
Well,
solo
the
Ks.
529 is not retirement.
Okay,
It's
sorry,
education-
yeah,
educational
solo
plan.
Ks, Roth, and then the fourth one was
That's a 529.
The 529.
Yeah, the 401 was
Wait.
529.
So I think we got to quantify a couple things. So the max contribution to your retirement is 19,000, right? Something like that. What is
The
it
max
this year?
contribution to
To your
what?
to your
401k.
401k is
That's
19.
401k.
19.5, I think.
So,
But the
19.5?
age dependent as
no,
well.
It's over 20,000. I can't tell you the exact number.
Okay,
but
so it's over 20.
for 401k.
And is there a cap on the 529?
So that's a
It's
good
like 35
question.
G's.
It's a good question because you get a state deduction also for the 529 plan. So depending on the state, like for example, New York, there's a $5,000 state deduction for the 529. New Jersey is $10,000. Now, if you're married, it's $10,000 in New York and $20,000 state deduction.
You
Damn.
good?
in
Yeah.
Jersey,
guys, I told you
Jersey,
guys.
which is-
There's only one problem with Jersey.
That's the one time that you.
There's only one problem with Jersey.
Told ya.
One good thing about
I've been
Jersey.
telling ya.
There's only one
He
problem with
just said that's
Jersey.
the only one thing.
Hold on. Let me hear this. What's the problem?
Now
with
go
Jersey?
ahead.
Everything.
No, what's the
bro.
problem with Jersey?
Everything.
No, there's no problem with Jersey.
Everything.
so love, so love, so
So,
love.
Yo, bro,
Bring
he
me-
came
give
out
me-
like a
give me that-
Patterson dude, right? He's hands in his pockets, like, what's the problem with Jersey, bro?
Give me that solo K though. Give me that solo K.
All right, so what's the fifth thing that you should do?
All right, so
I know you got like 10,
I think
but
I saw it. The health savings account.
Oh, HSAs.
Health
Ah,
savings
yeah.
account. If
HSA
you
is good.
qualify for a health savings account, you should be making contributions to a health savings account. Similar to an IRA, you can, it's a deduction, and then you can use the money tax free.
That's pre-tax, right? As your HSAs.
So as long as you use it for like medical stuff, it's tax free.
right.
So just like a 529, just like a Roth
The
IRA.
funny thing with a lot of these programs or things is that you're using, like, you're paying copays, right? You're probably getting eyeglasses for your kids or whatever for yourself. So you're using these things, but you're paying the taxes and you're not using the deduction because I think more importantly, and I think one of the biggest reasons why we said, hey, let's get together and start a podcast is I think it's just a lack of information that's out there specifically
exactly what it is.
for our communities.
Like I know a bunch of people that have HSAs, like they contribute to it and don't know how to use it, like don't
Right.
even know. And sometimes that's not necessarily a bad thing because it's just accumulating.
there.
And then like, oh, by the way, you just had this big surgery. Like, don't pay that copay. Use that money instead of paying out of your pocket.
I know a close friend of mine that always uses HSA when he travels because he used to always get injured. He's like to the left
So
side.
they're
of me.
international.
He's injury prone internationally.
They are international. Reyes, what you got? We're gonna go final thoughts.
Let's go final thoughts. You want to go final thoughts?
Well, I know you had a question, so do you?
Nah, listen, man. You guys, there's a lot of us here tonight. I can't hog up the mic, man. It's my dude. I could talk to him anytime I want.
There you go.
Excuse me. This episode was brought to you courtesy of Rafael
Nah,
Reyes.
you guys are good.
Let
man.
me
You guys
just
are
let
good.
me just run through this real quick because I want anyone who's listening to do their research on these
Okay,
things.
no,
So
that's great.
you wanna purchase tax efficient investments, like munis, right? There's a tax benefit when you purchase
Municipal
munis.
bonds.
Okay.
Municipal bonds. Thank you for saying that. 'Cause some people would be like, munis,
No.
what is munis?
Captain Jelly was looking at me like,
you might want to look into munis, municipal bonds. You might want to look into
What? Wait, we got to build on that question now. So when you say municipal bonds, what do you avoid? State taxes on it?
So if you buy
Like federal or just state?
so if you
Good
buy a
question.
New York municipal bond, it's triple tax
Ooh,
free.
triple tax free.
Triple
on the
tax
state
free.
side.
The state side. If you buy in New York, like if you live in New York and you buy in New York,
and New York could
Can you
use
live in
some
a different state
deductions.
and buy it in New York?
well, you
triple-
can
That's
buy
huge
it.
right
If you
there.
live in that state, then you want to buy a municipal bond of that state.
Yeah.
So it could be triple tax free, right? So
Interesting.
That's a gem.
munis, then you have you have
That's a really good one.
stocks, as long as they don't pay a dividend, they're growing. Like I mentioned before, you can sell them, pay long-term capital gains tax as long as you hold it over a year. A lot of people like to day trade and they don't understand because I've had clients like that. They day trade, they think they're making all this money.
2020.
And then when they get that tax bill,
I was like, yo,
they're like, hold on.
I didn't
what
make
is
that
this?
much money.
People were selling rollies. Like, yo, I got this
You gotta
tax.
be-
Just
you gotta be careful with
so,
that.
so if you're trading, day trading short term,
I
where you gonna get
personally,
at 30-40%.
If you
I
keep, if you
personally-
don't reinvest it.
Yeah,
I personally don't think you should be day trading, especially if you don't know what you're doing. You shouldn't be day trading. You should be holding at least a year and not paying taxes on that. Because short-term capital gains tax, it's just going to be added to your income, and you might fall in a higher bracket now and pay more taxes.
Right.
Talk about.
yeah, but then can you offset that with a corp losses on a corp, right?
You
You
can.
get creative.
Yeah,
but it's a little bit-
well, it depends,
Sounds like a day
it-
trader,
it's-
though,
right? Like if you have losses, obviously, if you have losses, then yeah, you can reduce gains, right? But I say stay away from
I
it.
told you, hold on to GameStop. I told you.
I think this episode deserves the disclaimer, right?
Yeah,
Not-
we definitely-
not-
where
please.
is it?
Nothing
Yeah.
that we
Raphael,
said-
what's the disclaimer? Raphael, that's your disclaimer. Go.
All right, I'll bring it up.
financial-
Don't expect to use
Whatever
it
we're
today.
saying here, do not follow us.
Do not follow us.
We do have a CF.
Please follow
We,
us.
we do have a CFP, but you got to talk to him on
Speak
your
to
own.
your financial professional.
Yes.
Speak to your tax advisor. Make sure that anything you hear in this episode, you talk to someone that knows. If you want to talk to me, then I'll provide my
Well,
information.
yeah, we'll put your
I
information.
have a quick
Yeah.
question. I have a quick question in terms of this.
You know what's funny? We tell all our guests we're gonna put your information in the comment. We never put
and
it,
then
bro.
you forget.
We gotta talk to the
I
in terms
advise
about
you.
that.
when you look at the portfolio of your clients currently, have you come up or encounter any of your clients pretty much liquidating some of their crypto? And did you see massive tax consequences when those things happen?
He just wants to know if
I
he was
think-
the
I
only
think he would
one.
advise
Or was
them.
it
Well,
everyone?
No, I'm still
Well-
holding, but
Well,
I'm still holding
HODL,
some,
bro.
There,
dear life.
there's a lot of clients that ended up getting a 1099,
Mm-hmm.
just like they would, with individual stocks, and they had to pay taxes on that.
Yeah.
Some people think as they own crypto that you just don't have to pay any taxes, and then you'll be surprised when you get that 1099 in the
convert it.
mail, and you have to present that to your tax preparer, your accountant, and you're paying either short term or long term capital gains on that.
got it.
So they treat it the same way they treat a stock.
Yeah.
You know?
Right.
Yeah.
If you convert it back to US dollars. But you could go for a stable
So now
coin.
was
I'm
that
not a
your-
financial professional.
Real quick, the last,
Some more.
the last two things. If you're purchasing a vehicle, look, it's 2024, right?
Yeah, I think so.
If you're purchasing a vehicle this year, you might want to look into
10,000 pounds.
the clean vehicle credit.
Okay.
It's a beautiful credit. Look into it. If you buy a Tesla, it might qualify for it. If you buy one of those electrical cars, you might qualify for it. Make sure if you buy one of those cars that you ask the
you write
question.
it off.
You ask the question if the car qualifies, and they'll tell you.
nice.
They'll know if
nice
it qualifies, and it's a nice one. It's like
That's
$7,500.
But that's not part of the 179, right? Like the 6,000 pound that got depreciated by 60% this year.
Isn't it 10,000 pounds?
No, I believe that the depreciation on a section 179 for a 6,000 pound vehicle
G, bro.
dropped to like 60% as opposed to the 100%.
Section
Yeah, if I'm not mistaken, I think you're talking about bonus depreciation.
Yeah, that.
I think it was this
Somebody
year.
doing some
I
reading.
actually got to look in. I can get back to you on that, but yeah, I think with the bonus depreciation, I think they got rid of it. I don't know if this year, or if it's next year. But yeah,
It's
something
supposed to drop,
that you
bro.
want. You
Yo,
want
Listen, when I'm looking to buy it,
No
now they're
wonder
dropping
Jay
it.
was on his phone for a hot minute, right?
ChatGPT.
Section 179 of the tax. All
He had it as a screenshot.
right, let him
Zoom it in.
finish. Let him finish the list. You guys are getting too crazy.
Hold on,
all
let me
right?
just say this too. If you're making repairs to your home, right? Making repairs to your home, you might want to look into the residential energy credit, right? If you're putting solar panels and
Nest
this other,
thermostats.
look into whatever you can, add that will improve the quality, like energy of your home. You might end up getting a credit for that as well. So
Save your receipts.
Something to look into, and last but not least, I would say life insurance. Right, life insurance is just like a retirement account. You can
sir.
put money into it, protects your family. You can borrow from it, just like you would borrow from a 401k if you have enough cash. Great product, to have as well. Not only are you protecting your family, but there's some benefits. It grows tax deferred, and when you withdraw from it, premiums are coming out first, so therefore you're not paying taxes on that. So
Cool.
it's a benefit there.
Like
So final thoughts. We'll do 2 or 3 people. That's
yeah,
it.
that's it. Just
Yeah.
do 2.
Go Reyes. I mean, come on, yeah. bro.
Nah, Josh has been
No, no,
sitting
no,
there
go ahead.
chopping at
Yeah,
the
man,
bit. He's
you
playing
ready.
with his
I know
pen.
you-
Yo,
He
Josh
wants to
has
ask
been
a
like,
question.
He has-
he
Josh,
has
Second
mad-
man,
Josh,
no.
you
Yo,
can go,
Josh, let me read this, bro.
Josh,
let me
you
see
go,
this
Josh.
real quick.
Josh, you go.
That's my final thought.
He was writing what he wanted to eat.
Josh, you good. You good.
Yo,
you good.
that's
I'm
my
gonna order. I'm gonna order
This
this.
is what I'm gonna order to eat.
I'm gonna order mofongo with shrimp.
So you talked earlier about rolling in for those that went from 1090 or from W2 to 1099, potentially rolling over your 401k into a solo K, right? And you talked about being able to borrow from a solo K, right? So are there any? I didn't hear you talk about any age restrictions on borrowing from that. or any limits? Are there any? Is there a limit? Can you borrow
Well-
like up to 100% as long as you pay that back?
Yeah, when it comes to the loan, you just like a 401k, you're able to borrow 50,000 or less.
Okay.
Right? That's just like a 401k. That's the same thing for the solo K.
Right, I think it's like 50,000 or 50%, whichever is
50,
less,
yeah,
right?
exactly. 50%.
So
of
what
whatever
would
is
you,
less.
you could get freaky with it? Roll over.
Yo,
your,
wait, what? What?
So you could roll over
What?
your
You could
401k
get what?
to a solo K
Freaky with
to then buy the investment property that he talked about.
You can do a lot of things.
Yeah.
You know, and this is the part of planning. You know, when I sit down with a client and they're looking to take money out from
And
their
then you call the
investment,
mortgage guy.
you know,
I'm here,
and they have a retirement account before they touch the money in their investment. I'm like, okay, why are we gonna do that? Like, why not take a loan from your retirement account and use that to buy the property?
Yeah.
You
Is
know,
the interest
so-
rate
Okay.
similar to what the rates are with?
Well, the interest rate you're paying yourself pretty much.
Yeah, the interest goes to you.
You know, so it just makes more
It's
sense.
like
for you to-
7%, 8%.
You know,
I always recommend the same thing.
yeah,
Yeah, Ray has taught me that.
so, yeah.
Better to pay 7%.
Yo, Jelly, final thoughts.
Jelly,
I feel like your head is
Jelly,
going boom, 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 boom,
Yeah,
boom,
no,
boom,
no,
boom,
I
boom.
mean,
Jelly, you've
Jelly,
been quiet,
a lot
bro.
of knowledge today.
Yeah,
man. That's all I have to say. Like, you know,
All right, so if somebody got to contact you,
How
how
do
can
we
they
get-
do
yeah.
it? How can they? How can?
I would
With your
say
office, phone number, address, all the good stuff.
So my tax office is in 2823 3rd Avenue, Suite 106, between 148th and 149th Street in the Bronx. That's the tax office. I have an office in the city as well, but that's just wealth management. And then you can just go to my website, fuenteswealth.com. That's FUENTES, wealth, WEALTH. Did I spell that correctly?
I was about to be like, is the H silent?
So you can go to my website. You can set up an appointment there to meet with me, and again, we can strategize and look for the best possible way to make your next year tax season better.
So that we can get people to really look into financial planning. What does that cost someone? Like, especially an exploratory appointment, like if they're going to reach out now.
So it really depends. It really depends. There's no set price. It depends what I'm doing for you. I do like to look out for people that are starting, right? I'm not the type of guy that's gonna try to take advantage of you. I'm gonna try to help you out, get you set up. Because the hope is that eventually you'll be in a position where I can actually make real money off
Right.
you, right? Because that's what I like to do. I like to build you up, and then eventually you become a good client,
Awesome.
a good
I
wealth
like how you
Amazing
said
stuff.
real money with you and not real money off you.
Yeah.
It's important.
I mean, it's amazing. I mean, we all know, again, the impact of taxes, right? And
File your taxes, April 15th.
It's fulfilling. What I like about what Fern said is that he wants to connect with people when they're young, because time is your best friend when you're actually planning for things like this, right?
100%.
And compound interest is a big piece of the puzzle here. So thanks, Fern, for coming through.
Thank you, brother.
Man.
Sure.
Thank you,
Thank
Fern
you guys
Dollars.
for having me.
Thanks a lot,
Thank you.
bro.
Fern dollars.
Fern dollars.
All right, baby.
All right, let's go.
Catch us next week.